folks. It's great to be back again. I'm Rajeev, managing partner at Orias, an early stage VC fund with 95 startups and 3 unicorns. Welcome. I'm very excited to be doing this session with Florian today. Florian is a man who entered the world of finance after being a rock star, literally, right? He has over 25 years of experience in the financial markets and turned bullish on gold and silver in 2002. And in 2013, during the Cyprus crisis, he got into Bitcoin and cryptocurrencies and has grown from strength to strength ever since. This is very unique to find somebody that straddles both these worlds, because the gold and silver markets is a little bit more traditional, and crypto and Bitcoin is actually the opposite end of the spectrum. So I'm really looking forward to this conversation. But the big one really for me is Florian is a music producer and a composer. For more than 25 years, he has also been professionally creating, writing, and producing music. In fact, one of his most famous tunes, Maha Amba, was actually recorded in Mumbai. So Florian has been to Mumbai multiple times in the past, right? So Florian tells me he made his money as a rock star, and in the process of investing his money, he turned into a financial media star. So he's well known for combining his technical, fundamental, and sentiment analysis into one accurate conclusion about the markets, right? In 2015, he started publishing his Midas Touch Gold Model, a proprietary model Florian developed, which, as the name indicates, announces trends in the gold market and defines what is happening there. Since 2019, he has been the chief editor of the Cash Course Gold newsletter, focusing on gold and silver mining stocks. Currently, he heads Midas Touch Consulting, a firm focused on both the precious metals as well as the cryptocurrency ecosystem. He is well-known and highly respected market analyst in the German-speaking parts of the world. And now, after his move recently to the Middle East, and welcome again closer to India, Florian, we hope that he will be in India many more times. So look forward to it. I'm really looking forward to this. So what I'm going to do is to hand it over to Florian for about 30, 40 minutes, right? And folks, you don't need to make any notes, because we are all happy to make this conversation and the slides available after. After this, we'll move to the Q&A discussion. Please type your questions on chat and we'll definitely get to them. I look forward to a productive 60, 17 minutes. So Florian, over to you, and may the good work begin. Thank you.
Namaste. Thank you very much. It's a pleasure to be here. Thank you for the invitation, Rajeev. And yeah, welcome everybody. Thanks for taking the time. I'm coming to you from Dubai today, and I have a little presentation with me. Basically, it's kind of a big picture presentation just to get us all on the same page. And I guess after my presentation, then you will come up with lots of questions where we then can dig a little bit deeper and really figure this out on a personal level, okay? So let me share my presentation. Here we go. Does this look good?
Absolutely. Looks great, Florian.
Perfect. So we're going to talk precious metals and crypto. But to get there, first of all, I need to make you aware that I don't have any crystal ball. I don't know the future. And I need to tell you that if everybody would take responsibility for their own results in their lives, I think that we would be having a much better world and a much better time together. So responsibility is the key, taking it for all the results in life. And another thing that I need to tell you is I will first start with the really big picture. We will look at many different markets. We will also look a little bit at history, and then we come to gold and Bitcoin. And then obviously in the end, after my presentation, we will talk about your questions. So I believe that the most important thing to watch actually and to understand is that all governments and all central banks on our planet currently are creating money out of thin air. So it's called printing money. That's where the term comes from, obviously, when money was still mainly physical banknotes. Nowadays, most of the money is digital. So it's just hitting a mouse button or a number on the keyboard to create this money. But what actually is happening is, and this is the Federal Reserve balance sheet in America, the United States, you can see that this balance sheet, the total amount has been rising relentlessly after the financial crisis, and especially since the autumn of 2019, the so-called repro crisis, long before actually the Corona crisis started to happen. And over the last 13 years, the American Central Bank has increased the currency supply by nearly 8 times. For me, as I'm still registered in Germany and used to live in Germany, obviously the European Central Bank was important. Unfortunately, they have never been following the policies from the German Bundesbank, which was much more conservative and took much more care of the national currency. The ECB also is in the business of money printing and money creating out of thin air. And as you can see, the balance sheet has been rising constantly with short little breaks, and now is going also parabolic over the last 1.5 years. And as most of you are certainly know in India, the same is true in India. So the Reserve Bank of India, you can see that the balance sheet is also going ballistic, it's going parabolic. And if you look back, we can go back here to 2004. So this is like the last 15, 16 years. The balance sheet is up nearly 7 times. So if you have in rupees, your net worth had to increase by 7 times over the last 15 years just to keep up with the purchasing power and the increasing available money supply in India. So that's actually quite challenging to make such returns over 15 years. I mean, it is possible, especially since now this one here is happening all over the world. It's going more parabolic. Making money in the market has become a little bit more easy. But you have to consider that you have to make money after taxes and you have to make money after inflation. So in the end, I think it has to become even more complicated. So it's not only just making a nominal return anymore, but you have to consider what is the inflation rate, how much money are they actually really printing, and how much taxes will I have to pay on it, so that overall and after all, I still make money. So this is the Reserve Bank of India, and this is just one combined balance sheet of the Federal Reserve in America, the Bank of Japan, and the ECB. The Bank of Japan is doing this game actually quite much longer. Since 1990 they started, and you can see that just these 3 countries alone have been increasing massively the currency supply over the last 15 years. And the consequences, yeah, the purchasing power, the value of your money is diminishing by the day. And we have basically a currency war going on in the world. Everybody is trying to devaluate their own currency against their neighbor's currency to have a little bit of a advantage in the competition. However, what it really does is it's just a race to the bottom. And everybody's trying to kick the can down the road to buy a little bit more time. This is no solution. This is not sustainable at all. All it does is it's especially destroying the middle class and the little guys. And some people who figure out with a lot of money how to make more money out of it make incredible amounts of money, while society is being destroyed and distorted especially. And in the end of the day, what does it help you if you have multi-million bank accounts and the little guys around you all hate you? So this is not sustainable in the long run. And you're certainly aware that out there's lots of discussions whether we have inflation, deflation, hyperinflation, stagflation, etc., etc. And I personally believe that the best way to describe what's actually going on is the so-called crack-up boom. So the crack-up boom is a term or a thesis phrased by the famous Ludwig von Mises. He's been basically the founding father of the Austrian School of Economics 100 years ago. And I have the definition for you here in written form so that you can take a look at it. A crack-up boom is an economic crisis that involves a recession in the real economy and a collapse of the monetary system due to continual credit expansion and resulting unsustainable rapid price increases. So we've seen a recession after Corona. Now many economies have bounced back, but what certainly is continuing, and I just showed you this in the charts, is this continual credit expansion. And we are already also seeing unsustainable and rapid price increases, okay? Inflation is here already. And the cracker boom is characterized by two key features. So it's the excessively expansionary monetary policy, which leads to out of control inflation expectations. And what does this mean now, out of control inflation expectations? It's a mass psychological phenomenon. And I'm pretty sure if you consider, well, I need to buy a new bed, would you rather buy it today or wait another year? And I know more and more people, including myself, who would rather buy it now instead of waiting for a year, because we all assume in a year it will be even more expensive. And that's basically the psychological effect that then leads to more and more accelerating inflation expectations. And then, yeah, the trend continues and pushes inflation expectations further down the road. So this is the first key feature. And the second one is that finally, at some point, a resulting bout of hyperinflation then will come, and this ends basically it leads to the abandonment of the currency by the market participants, because everybody has lost the confidence in that currency. And simultaneously, you will see a recession or a depression. We are not there yet, okay? This is like the very big end game kind of outlook. We are likely on the way to that scenario over the next few years. It can happen within the next few months, but it's unlikely. I guess we will need a few more years. And the cracker boom basically is the crash of the credit and monetary system due to this continual credit expansion and the price increases that that cannot be sustained in the long run. So that's the definition. And in the face of this excessive credit expansion, the consumer inflation expectations accelerates to the point that money becomes completely worthless and the economic system crashes at some point. So that's the classic 100-year-old definition of a cracker boom. And to phrase it maybe a little bit more simple, all it takes now is that the confidence of the people reaches a threshold, a certain critical mass of people who doubt the current system and the current fiat systems. Many of the people are obviously employed. They have a 9-to-5 normal job. They have a mortgage to pay. They have a family to feed. So they're very busy with lots of other things than thinking about what we are here just talking about. But these people are also slowly but surely getting aware that prices are increasing everywhere, right? So you will see, and we're seeing it already. I mean, healthcare is exploding. The prices for school is imploding. The rents are going up. Even grocery shopping has become more expensive. If you want to build a house nowadays in Germany, I know it from many friends, it's a nightmare. You cannot plan anymore. The craftsmen are hoarding the material they need so that they can even come up with an offer for somebody who wants to build a house, because if they say like, I will build this house for you, and then down the road they don't get the material, the whole calculation is being destroyed. So hoarding is already starting in Germany, and I have a lot of personal examples. And this is a process that is step by step accelerating and intensifying, okay? So this is the definition of the cracker boom. And the result so far is, if we look at the stock market in America, for example, the NASDAQ Composite Index, it's going through the roof and it's unstoppable. And any little dip, any little pullback is being bought immediately. I mean, a week ago, the market opened up rather weak on Monday and Tuesday after this disaster in Afghanistan. And then the third day, on Wednesday or Thursday, the market already went up and made a new all-time high. Because the Federal Reserve has been creating constantly new currency supply, and they continue. And this is a classic consequence out of this money printing situation. People escape or run into the stock market. So it's very likely that the stock market simply goes on and continues higher. It is already parabolic, but it still can become more parabolic. It's actually, from a mass psychological perspective, what I still miss in the NASDAQ and all these tech bubble stocks, it would be a doubling within a few weeks or a few months. That's basically the typical mass psychological phenomenon at the end of a large and long bull run. And you can see how long this is already in the making. This is basically started here after the financial crisis. And I mean, if you put this all together, it's running actually since the early 80s. But it's not only the stock market. The bond markets are also just going up. The value of the total global bonds is increasing every day. So interest rates are going down. The value of the bond market is going up. It's directly linked to the currency creation of the Federal Reserve and all the other central banks. The same is true for the US real estate market. You can see very nicely here how much these two things are correlated, the US home prices and the Federal Reserve balance sheet. The same is true in Europe, in Germany. House prices are also going through the roof, and this is also very much correlated with the ECB balance sheet. And while the balance sheet is exploding, and this is just one example, this is just the Federal Reserve in America. I showed you that the ECB is doing the same. I showed you that even India, of course, is doing the same. And I can tell you that China is even more aggressive than all the other central banks. I can tell you that the Australians, the Brazilians, the British, the South Africans, the Canadians, they're all doing the same thing. And in every country, it looks like this. The balance sheet goes up because they create more and more currency out of thin air, while the interest rates that you get for your money, and if you leave it in the bank account, basically, it's going down. And in many countries, it's already becoming negative. So in Germany, we have negative interest rates. And that gives you an idea about how valuable your money actually really is. If you have to pay your bank some money so that they take the money from you, it would be like the restaurant owner has to pay you so that you come to his place and have dinner there. Huh? I mean, that's how we are. That's where we are. That's the situation. And it breaks a society if we don't have a free market and a free competition and a good money that backs everything and that helps us to make good business with each other. So that's the situation where we are. And if you followed me until here, it's very easy to understand that if you divide, for example, the S&P 500 as one of the most important stock market indices and as a good proxy or a good example, and you divide it by the Federal Reserve balance sheet in America, then you get this chart. And you can see that basically, in real terms, the stock market has gone nowhere, okay? Because the value of the currency, the US dollar, has been destroyed so much by all this newly created dollars over the last 15 years. So it's the denominator. And that's why you can also make the call that we are not really in a bubble in stock market, and we're not really in a bubble in most any other assets. What we are in is a bubble in fiat money. Okay? So I think that's a very important chart to understand. And if we look back into history, I mean, Germany is one of the big countries that experienced the hyperinflation. So I'm personally have inherited, for example, an old banknote from my mother's side, the grandfather. It's like a 1 trillion Reichsmark from 1923, and you could see like many stamps on it, and it went like many times. They increased the value of that banknote. And what happened back then, and this is the guy here, Rudolf Havenstein. He was the German Bundesbank president in 1921. Similar to Christine Lagarde, who is now the ECB president. Similar to Mrs. Lagarde, Madame Lagarde, Rudolf Havenstein, until the end, he couldn't see the link between his money creation and the rapid price increases. He couldn't come up with understanding that it was his fault and it was the consequence out of creating so much money that prices increased. And unfortunately, it's the same truth today. Madame Lagarde cannot see it and doesn't want to see it, at least not publicly. Mr. Powell neither, and I can assure you that any of the other big central bankers and politicians in this world will deny that link. So they just keep continuing, and there is no way out of this game anymore. We are in a parabola, an exponential rise. Anybody who tries to stop this, I guess they will either immediately lose their job or even maybe killed, who knows. And nobody can actually stem that kind of pressure from society, because people will point on you. Because if you stop creating so much money out of thin air, if they stop, the whole thing will come down, and everywhere, the whole planet, it's so leveraged everywhere, and everything is depending on this fiat money creation. So nobody would like to be the one who's basically responsible for such a disaster. So they will simply continue. And just to remind you what happened during this terrible time in Germany, there were actually a few hopeful moments on that path to complete destruction of the German mark back then. So you see those 4 green circles. During those few months, people believed like, yeah, we're getting back to normal. Everything will be good. Don't worry. Inflation is transitory, you know? So that's actually what happened back then in Germany 100 years ago. And finally, it was a hyperinflation. And it took a long time until people really realized. And if you realize that you're in a hyperinflation, in this last final spike here, you have lost already basically everything, and you won't have any chance to protect yourself anymore. So I assume we are somewhere, I don't know, obviously it's hard to compare, but I assume we're somewhere here in between, let's say maybe early 1920 and maybe late 1921, somewhere in that range, I assume. Who knows? It could take another few years. Remember, all it takes is the critical mass to reach a threshold. And we are a few billion people on that planet, lots of countries, international, so it can take some time. So Germans had lost everything. And I can tell you that my mother's side, they lost everything. This is the guy who left me this 1 billion Reichsmark banknote. While my father's side, he was a smart entrepreneur, my grandfather, and he had gold, and he hid it in the garden basically of his house. And he was able, at the end of the hyperinflation, he was able to buy a few houses with this gold in Germany. That basically created the family wealth 100 years ago. So that was an incredible moment of history, but unfortunately, people don't learn from history. And I think that itself is the most important lesson from history, that people don't learn from history. So this is what happened in Germany 100 years ago. And if we now also finally zoom out a little bit further, when we talk about world reserve currencies, so you see that there is something coming, something is going to change in the future. We don't really know what it is exactly, but if you remember or become aware that the Portuguese were ruling the world with their escudo from 1450 to 1530, nearly 80 years. Then it was the Spanish for nearly 100 years, then the Dutch, the Netherlands with the gulden, then it was the franc with the French, then the British pound ruled the world, also India obviously, for 100 years. And then after the First World War, and exactly to that time where I showed you the hyperinflation in Germany, that's where the US dollar basically came into the world reserve status. And as you can see, usually this takes about 100 years. So we are due for a change. And the question now is, what will it be, right? The next world reserve currency. And we probably have only 3 options. The first one, because it's obvious that the dollar, I think, I mean, you've seen the disaster in Afghanistan. To believe that America will find a way out directly out of this mess now, I think is very unlikely. I think America overall is going down. People need to get humble there again and modest and understand that it takes hard work to build an empire. So it's very likely that the time of America is coming to an end. And obviously, the largest power rising in the East is China. So just from that graphic here, you might assume that China will be the next world reserve currency country or nation. However, nobody wants the renminbi. Nobody wants that. and the renminbi is not backed by gold yet. So that might be one of the reasons why the Chinese have been buying so much gold over the last 20 years. We assume they have around about 20,000 tons nowadays. And we can assume that maybe if they come up with their digital yuan, at some point they will back it by gold to make it more attractive to the rest of the world. So that could be one option. Another option is that we're going back to some form of a gold-backed Bretton Woods kind of system, which is also a lot in the discussion nowadays. And the third option, which is my personal favorite option, would be that Bitcoin becomes the new world reserve currency. And by the speed and the advancement that this currency has done over the last 12 years, I think the probability is rising by the day that it will be Bitcoin, because, and we will definitely talk about this now in the discussion then as well, Bitcoin is superior money to all of the fiat money that is available. And also Bitcoin has quite some features that makes it superior to gold. So that's the big question here, which will be the next world reserve currency? And I think we don't know the answer. I told you I don't have a crystal ball, but you want to be at least prepared for that kind of scenario in case that it happens. So, and of course, for that case, you need to own some Bitcoin, okay? So the solution to all this mess that I showed you is you want to have hard assets. Hard assets can be stocks, can be real estate, but it can be especially tangible hard assets like gold and silver, and especially also like cryptos and Bitcoin. And I personally, and Rajeev said it in the introduction, I'm a big fan of both gold and Bitcoin, because I think, first of all, you always want to be open-minded. You need to understand that things are changing. And I don't think it's impossible to think either or, right? You wanna think and you wanna think both. So you want to own gold as well as Bitcoin. And in my example here, or what I want to come up with, like a little maybe funny example, is I think opposites they complement each other. And we are living in a dualistic world, yin and yang, for example. You have the body and the mind. You have up and down, you have warm and cold, you have summer and winter, and you have digital and analog. And it's a beautiful combination. And people, we are actually bound by the necessary attractions, the polarity of opposites. And in this sense, I think that you can view gold and Bitcoin as a pair of strengths. They complement each other, actually. So while gold has the physical component, it's 5,000-year-old track record, safe haven, has survived any emperor, any dictatorship, any war and everything. You have on the other side, you have a pristine digital asset like Bitcoin, which is decentralized. For the first time in mankind's history, we have something that is decentralized. And it's math. It's actually just math. And I believe they both complement each other very well and are a perfect, true safe haven for the 21st century, given to what is happening in the big picture that I showed you here in the intro. So I think you want to own both, and you just actually need to figure out how much. You know, that's actually the only real question that everybody needs to figure out, like the asset allocation, the position sizing. And make no mistake, first of all, it's about Bitcoin. And there is so many little coins out there nowadays. Thousands of little tokens and coins, and some of them are really good. Ethereum is super interesting, it's very exciting, but it's something different. If you want to compare Ethereum and Bitcoin, it's like Bitcoin is kind of like a digital gold, and Ethereum would be your Apple stock. It's more of a speculation on a company, on a network, on a business idea, while Bitcoin has reached a level of decentralizedness that none of the other coins will ever reach, I believe. So let's quickly look at gold and Bitcoin, and then we open up for questions and discussion. Gold has been in a bull market from 2001 until 2011. massive run up from $250 up to $1,912 $20, and then we've seen a 4-year kind of like consolidation, a little bear market or a little correction. But in the end of the day, in the really big picture, and this is like the last 20 years in gold, you can see all that it does basically is it was like a big cup that it was building, and we're probably now building something like a handle here on the right side. So maybe it takes a few more months, maybe even a year or two, until gold will finally take this breakout here above the $1,900, $2,000 level. But once it does, I assume that gold will shoot up to $5,000, maybe even 10,000 or even higher, depending on how fast this whole inflationary train continues in the future and how fast we're basically moving into a rather hyperinflationary scenario. And you can see that this last 12 months in the gold market has been painful. It's been very difficult. And it's been less a problem of deep price correction, which we didn't got, right? We had, I mean, gold corrected from 2075 to 1670, so nearly $400. And that's it. And before that, we had this big run up from August 2018. Gold went up from 1160 to 2075, so $900 it went up, and now it corrected $400. I think that's still healthy, that's still natural, that's still acceptable. And you can see that the really important thing is that this extreme positive, extreme bullish, extreme greedy sentiment that we've seen last year in summer has been now completely worked off. And yeah, gold is even in the longer term, in the monthly charts here, getting very interesting again. So I think I don't see a lot of downside anymore in the gold. Maybe the worst case would be 1600. And now, if you consider this big picture that I showed you, your job really is to make sure that whatever gold does in the short term, it doesn't harm you in the long term. So you need to have a form of investing in gold, and preferably, obviously, physical, because it's the easiest to sit through these kind of corrections. If you want to invest into mining stocks, you need to have more knowledge of the mining business. You need to have more knowledge of the management. You need to have more knowledge of the project and the geology. And you need to have really good, how you say this in English, seating meat. You need to be able to sit and wait and not freak out by 30, 40% price drops, because that's what happened to all these really good mining stocks in the precious metal sector over the last 12 months. Some of the top companies, even Agnico Eagle is down 30, 40%, or a Barrick, because in a gold market correction, all these stocks are coming down. And then your psychology is your worst enemy, because you forget about this big picture that I just showed you. And you look for arguments why you should get rid of it. And you're suffering with the investment instead of seeing the opportunity, which actually we had a beautiful opportunity just 3 days ago. The GDXJ, the junior miners, extremely oversold. Only 11% of the stocks in that ETF above the 200-day moving average. That's a contrarian signal. The market is very beaten down. The sentiment is very pessimistic and negative. That's the time to start buying into such a sector. And then you need to have really the patience to sit through these movements also. So physical gold, no problem to sit through. Mining stocks already much more difficult. Once you introduce leverage to the gold market, that's where the problems come. And that's always the same problem. And we have a lot of Indians that follow me in our Telegram channel. And it's always the same that I see. They all trade with leverage instead of just buying the physical and hold it. And they make their life so much more complicated. Because we've seen it two and a half weeks ago, a big takedown in the gold market. That was an obvious manipulation. Somebody sold 24,000 future contracts directly at the opening when nobody is there, when there's zero volume. Nobody would do this, right? If you have a money manager who's doing that for you and throwing that amount of gold contracts, it means they don't care about the price. They just wanted to put the price under pressure. And you can sit through all this manipulation easily if you have physical gold. You can also sit through it more or less okay-ish, I would say, with the mining stocks. With the futures, And with leverage, that's where the problem's coming in the gold market. But I'm very optimistic down the road for gold. It might take a few more months until it's really ready, but I'm very sure that in the long run, gold will be much higher and you want to own it physically. And that's actually the beauty that gold has in comparison to Bitcoin. Gold doesn't need electricity. Gold doesn't need a free availability of free internet. And gold doesn't leave any traces. If you buy some jewelry, if you buy some bars or some ounces, whatever, some coins, and you pay cash, there's no traces at all. And that's how my grandfather did it 100 years ago. And that's still possible today. And so that's gold. And on the other hand, Bitcoin, a spectacular rise over the last 12 years. Nobody would have thought that this brand new asset would rise from a few cents up to $65,000. And most people still don't own Bitcoin. I mean, it is obviously more and more people are participating and becoming aware of it, but still, I don't know so many people that really consequently, normal people who are not into finances and investing, who simply hold some Bitcoin, that they would have stored it away, don't touch it, hodl it, that's how you call it. And the beauty about Bitcoin is that obviously the first 2-3 years when it was very vulnerable, somehow nobody attacked it. And nowadays it has become or has achieved such a level of decentralizedness that it's unstoppable. And look, China just a month, 6 weeks ago, they basically forced the whole Bitcoin mining business out of China. They destroyed the whole mining sector, the Bitcoin mining sector in China. And yes, the prices went down. It was for a few weeks a disaster, liquidation, etc., etc. But the system itself went on flawlessly. And look how strong Bitcoin nowadays is. It just continued. Was no problem losing nearly 50% of the miners. It's unbelievable. If this would happen to the gold market, 50% of all the mining companies run out of business within a few weeks. It's unbelievable. So Bitcoin has survived this. And the history of Bitcoin tells us that whatever didn't kill Bitcoin, it made it stronger. And that's where we are. And I think Bitcoin has become even more stronger now after this attack in China. And it's not the first time. The Indian government also tried to regulate it and stop it. It didn't work out. And many other governments have done it so in the past. And I think now there's already with El Salvador a government that basically implements Bitcoin in their currency system. So the main takeaway really is you need to be open-minded towards Bitcoin. You need to get it into your own hands. You need to try it, even with a little amount of money, just to figure out how it works. And you need to take this serious. And any larger dip over the next few months is your opportunity to protect yourself in terms of digital protection. Okay. You see, this is a rainbow chart here. It goes back to the last over the last 10 years. And currently, you can assume that Bitcoin is just a hold or position. So it's not too expensive, but it's also not too cheap at the moment. And so I'm not recommending to jump into the market with both hands right now. I think the prices are very elaborated after this strong bounce over the last 6 weeks. You want to be very careful. I assume we will get a pullback sooner or later back to maybe $34,000 to $38,000. That would be from today's prices, yeah, around about $12,000 lower. That would be a first opportunity. So you could buy Bitcoin maybe 30% cheaper in the next few months with some luck. And you need to do it, I believe, because there's only 21 million Bitcoins available. Probably 4 to 6 million are already lost at some hard disks who were thrown away. People lost their private keys. They don't have access to them anymore. And just imagine how many millionaires are out there. So you need to get some Bitcoins in your hand. And even if it's 0.1 or 0.01, whatever, obviously the more you have, the better. And again, with gold, the same is true here too. The only way to make money in the market is to buy low and sell high. So you always have to control your emotions. You have to have a good plan, low limits. I'm not chasing any market. It's super exciting, the crypto sector. And I think Rajeev will then also ask me or talk with me about all this DeFi, the decentralized finance world that is opening up. And we can talk about some tokens and coins like Ethereum, obviously. And there's also gold-backed stable coins nowadays. And you have also the possibility to have a digital US dollar with the USDC and USDT, which are stable coins. So there's a lot of things going on in this new ecospace. And one solution or one possibility that I haven't mentioned yet, when I showed you the big picture, it doesn't have to mean that everything breaks down and crashes down and hyperinflation, end of the world and anything. It could also be a smooth transition and the central bankers just continue to print money while the people step by step move into a different ecosystem. And it could be actually a transition that doesn't create too much friction. It will create some, but if people continue to adopt more and more these new digital assets like Bitcoin, yeah, we could actually rather smoothly make a transition into a new world and a new system. And if Bitcoin is the denominator and if Bitcoin becomes the world reserve currency, I believe that you will see less war, you will see less governments acting like dictators, and you will see more and more people waking up to the fact that we need a free market, that we need free competition, because that's always the best, creating the best results for everybody. And yeah, I have one chart here for Bitcoin for the last 10 years. Obviously, in the end of the day, it's been a crazy rally up and away, but you had a lot of times where you could buy cheap into it. And if we get this next pullback, maybe down here to 34,000, that would be a first opportunity. Should we be in a larger correction here since this new all-time top in May? I could even imagine that Bitcoin goes back to 25,000, but I think that's the absolute worst case scenario. And you cannot bet on this scenario anymore, because given what I showed you in the beginning, things are accelerating. I don't think Bitcoin will bring another 2-year crypto winter. That's how it called this long correction here in between 2018 and 19 up to 2020. I don't think we're going to see something that long anymore. It might be a few months. We will see crazy volatility in all those markets, no doubt about it. But you need to have a plan and a recipe how you will buy into those dips, and preferably with an automated system, or at least with system orders in your system, in your brokerage account, so that you don't sit in front of the computer. Oh my God, should I buy? Should I sell? Should I hold? Should I do? Oh my God, I don't know. It's moving so fast. You don't want to get yourself into that situation, given what is happening in the big picture. Okay, you need to protect yourself, and this is very important that you have some exposure to gold and to Bitcoin. And obviously, if I say gold, I love silver as well, and I believe that silver will also at some point go triple digit down the road over the next few years. And finally, Bitcoin against gold. Obviously, Bitcoin is outperforming gold massively. So you cannot afford to have all your wealth in gold. I have a few clients that I helped with. Initially, they had all their gold stored in Switzerland in vaults, and that was basically the vast majority of their net worth was in gold somewhere in the Swiss Alps. And if you look at that chart, even the best 5,000-year-old safe haven asset becomes a very painful asset if you compare it to Bitcoin. So you need to have exposure to Bitcoin too. And the only question then is to figure out the percentages, and that's obviously a very individual question. Okay, so that's my presentation. I hope it didn't went too long. Maybe one last chart that I didn't talk about. Besides gold and silver and Bitcoin and the cryptos, commodities in general are very helpful against what is coming. So we've seen oil going through the roof. We've seen copper prices going through the roof. Recently, we've seen lithium going through the roof. I think Nickel, cobalt is very interesting also given the boom and run towards electrification of the world. And you can see the comparison here, stock market to commodities. Commodities are extremely undervalued. And in that kind of scenario that I showed you in the first part of the presentation, commodities will do extremely well and they will outperform the stock market and also the real estate market. So I'm also very interested in mining stocks. And not only precious metals, but mining stocks means for me also resource stocks, can be oil stocks, can be lithium, can be cobalt, nickel. There's lots of opportunities. Uranium, for example. All right. So
great.
Thank you very much.
Thank you, Florian. Perfect. I think, I've been really excited to talk about this. So let me start off with one, let me talk about this philosophical question. See, if you think about gold versus Bitcoin, even though they are both reserve assets and they're both, supposed to guard against inflation, in one sense, Bitcoin seems to represent the Armageddonists, right? So somebody that doesn't trust the existing ecosystem, somebody that says basically let everything break up, let the world fall apart. And that's when I need to have the viewpoint of Bitcoin, because Bitcoin is essentially, as you said, decentralized, right? So there's no central bank, there's nothing. So the existing ecosystem almost doesn't exist, or if it breaks up, then Bitcoin sort of grows ahead. So that's one philosophical viewpoint of that. Whereas gold seems to be sort of more in the, let us keep the status quo going, right? So I would sort of say that the Bitcoin is a little bit more the youngsters' viewpoint of the world, the ones that are into the meme stocks, the ones that are sort of pushing up the, GameStop and those kinds of things, versus the ones that are sort of traditional and sticking in this. Is there a viewpoint like that? I mean, are we seeing that two different kinds of people are gravitating between these two ecosystems? Or because you're being able to bridge both sides, I'm sure you get into this debate on a regular basis. What is actually happening in terms of how people look at this?
Well, I mean, step by step, more and more people waking up to the fact that Bitcoin is unstoppable and that they need to look into it. And of course, you have these hardcore Bitcoin maximalists who don't want to have anything to do with any other asset, neither gold nor other digital tokens nor fiat money, of course. And then you have the classical gold bug who is still believing the world is crashing, everything's coming down, and you will pay your chicken with a coin of silver at some point again. Okay, so these are the extreme views. And I can just tell you from my own life, I think what we need to be is open-minded, because one thing that is sure in our life, no matter what, change. Things are always changing. And we need to be flexible and open-minded to adapt to new situations. And if I just can tell you from like the dream of the Austrian School of Economics is a free competition of free private money. That's the best world for all of us, I believe. And we're getting there in the crypto space right now. The problem with the gold space is that, last year, lots of people did private placements in all these gold stocks. They bought projects, gave lots of money. And then, it didn't went to buy physical gold, but they bought some future expectations and hopes of maybe they will find some gold over there. And then in 10 years, we build a mine. And then if they really build a mine, more supply is coming to the market. And that's a problem with gold that Bitcoin doesn't have. So I think you see more and more very intelligent people moving towards Bitcoin. Paul Tudor Jones last year was one of the first big guys publicly announcing that he holds 1% in Bitcoin. And I'm pretty sure now it's much more, not only because the price has gone up. And if you follow interviews with Michael Saylor, for example, it's a super interesting guy. It's an extremely smart guy. You don't have to agree with everything that he says, but it's hard to find such people currently in the gold space, I have to be very honest.
Understood. So let us talk about gold. So because gold has sort of been behaving like a truant child in the last at least 2, 3, 4 months, right? On the one hand, inflation has been shooting up over the last 3, 4, 5 months, and real interest rates have sort of been getting worse and worse, because the bond markets have also been, as you said, bonds are rising in price. That means that the yields are falling, right? So the delta difference between inflation and the bond yield is in the 3.5, 4, 4.5, 5%. that ought to create a big bull run for the gold market. And that doesn't seem to be happening. Gold actually, as you said, 24,000 contracts out there, and it's actually fallen out, right? So what actually is happening? I mean, the faith of a lot of people is being tested by gold being this, hedge against inflation. Whereas, actually inflation is rising, real yields are, falling, and, that doesn't seem to be changing anything. So why is this dichotomy out there in the gold market?
Well, I think there's quite a few reasons, or at least quite a few ways you can explain what's going on. First of all, we have to remember that gold made a big move from 1160 to 2075, from August 2018 until August 2020. So within 2 years, the price of gold went up $900, or 80%. Gold is an old-fashioned asset. This is a big move for gold, okay? And now it's consolidating for 12 months. And gold actually was the first asset to price in all this money creation, because Bitcoin didn't move up until September last year, but gold had its move done already. So gold, I think, was moving first. The problem with the gold market is that it is so obvious for the people who study the gold, who own gold, that you love it, of course, and then it's so obvious that gold, everybody should run to gold. But it's not the case that everybody thinks like you or me. So, and that's the typical problem of the gold bug. And that's also what you see then in their portfolios, that usually they are completely overexposure to precious metals. Once you get it, that the whole fiat system is a Ponzi scheme, you tend to overinvest in that one sector. And then obviously you become vulnerable, because I'm pretty sure the physical gold, nobody was worried about over the last year, but most of the gold bugs then tend to invest into the mining stocks, and they also tend to invest with leverage, and they buy the futures contracts, and that's where it's then getting really painful. And then they try, they constantly buy without looking at the market, without acting like a contrarian. And last year in the summer, simply we had a very big hype in the gold market, and it takes time to work this hype off. And I think that's the best explanation that I can come up with. Gold has been digesting this big move. It's still kind of digesting, but you see, we had 3 lows now at the 1675-ish kind of range. 3 times it bounced. Now it's again moving higher. Let's see. I mean, obviously, if we move below that number, we are in for another round of correction. But I think it's not necessarily the case that this will happen. Gold has the tendency to, how you say this, torture people over time, you know. It's not that there's such a big price movements. The price movements are only painful if people have leverage. Price movements are not that big, but it's this time component. And then you sit there a year long, inflation numbers go through the roof, and your gold and silver is doing nothing, or is going even down. And that's so frustrating. But again, we also need to be aware there has been 4 big manipulation attempts over the last 12 months. The first one was in November last year, when the vaccine came out. Gold went down $150 within a few hours. The second one was in early January. Again, gold was beaten down $150. The third one was in June, when the Federal Reserve said, like, yeah, maybe in 2 years we might discuss whether we then maybe will increase interest rates. And the last and most obvious one was just 2.5 weeks ago, when as I said before, 24,000 contracts out of the blue in the middle of the night. So you play against the central bankers. They obviously know it. This is an indicator, so they try to keep it down, because if gold and silver would really like crazy, it would basically, yeah, put fire into this whole thing, and then you would see many other commodity prices immediately go through the roof too.
But then, Florian, if what you're saying is true, isn't it better to stay away from the market because of so much of manipulation happening? You know, you would rather be in an open market where there is no manipulation as compared to being in this market, right? So actually, what you're making seems to be a case for not buying gold at all, isn't it?
No, it is the case to buy physical gold.
Okay. No leverage is really what you're saying. Got it. Okay. All right.
Preferably stay away from leverage and keep it simple and safe. And this is the physical gold.
Got it. Got it. Let's say
will not help you.
Got it. Let's take the blockchain and the Bitcoin universe and the cryptocurrency universe. So we now have two different worlds there, right? So you've got the DeFi, which is decentralized. Everything is, there's no one owner of anything, et cetera, et cetera. And then you've got the CBDC phenomenon, right? You've got the, US digital coin, China-based digital coin, et cetera, all of these guys are going into digital assets. So where does this philosophy sort of stabilize? If DeFi is really the game that's governing the Bitcoin / the digital, cryptocurrency ecosystem, then why are the big boys that own everything getting into the digital currency? And what is going to be the shakeout of this? Where is this going to fall
out? I mean, most of the big institutions have missed the train in the beginning. And now they are under heavy pressure because they need to perform in the end of the day, right? And if you see that Paul Tudor Jones starts to buy, and then you compare your own performance with this guy, yeah, at some point you will have to explain to your customer why you are underperforming. And so that creates a rush into the digital currencies. Then we had the strong technical breakout last September, and you see nowadays lots of institutional money moving into the sector. And for the first time in history, they're not there, the first ones. They're coming after the retail guys, so to speak. And there's lots of people who made a lot of money in Bitcoin over the last 10 years. Unbelievable. And most of the people you don't know because they are not showing up in public. And I believe that all these institutions are forced to buy into these assets, into Bitcoin especially, but also other digital assets. And it's creating a completely new ecosystem. And everybody tries to come up now with their solutions when it comes to exchanges, to brokerage, storage solutions, custody solutions. And this is actually part of the game theory that Satoshi had already thought about. So it's extremely interesting how this is now continuing. And if we might see that Salvador is doing really well with their implementation of Bitcoin, you could see a rush of other countries into it as well. So it's an unbelievable game theory. And once you start digging into the Bitcoin and go down this rabbit hole, I mean, it never ends. It's like so amazing and so powerful.
Got it. So one thing you spoke about was how the fiat currencies are getting debased, and definitely the dollar, because that's the central bank that has sort of created the most dollars in the last 1 year or so. But when I look at something like the DXY, it sort of seems to be breaking new highs at the moment, right? It went from, I don't know, 89 or 88 about 3-4 months ago to almost 93 at this point in time, and it seems to be rising. So it seems to me that the market is sort of, if what we are saying is true, inflation is going up, dollar is getting debased, then people should not be buying more dollars. So, but on the other hand, dollar is going up, right? So what sort of explains this dichotomy in terms of how you're looking at this?
Yeah, because you compare the dollar to other fiat currencies, which is not important at all to me anymore. I'm not interested in these fiat currencies. It doesn't matter which one is stronger or less stronger for me. I mean, of course, if you are a company and you're producing things, you need to be aware of the currency fluctuations. You might need to hedge yourself at some point. But where's the difference for me? It's fiat money, it's paper money, backed by nothing, created out of thin air constantly. And then it's only like which central bank is printing faster, and how is the perception of the world which central bank is printing faster. The DXY is just a basket of other foreign fiat currencies against the dollar. It says nothing. What's important is how much do you have to pay for food, for example, or for if you have to pay rent, for example, how much is the prices. And I look at it in Bitcoin, everything becomes cheaper. So
yeah, no doubt about that. I think that sort of explains it all. Excellent. So I think last couple of questions. There was one question about, I think, specifically silver. Silver seems to be sort of underperforming gold right now, and its technicals are clearly weaker as compared to gold. Any thoughts and comments on why that is? Because silver was supposed to be this one metal that had both industrial and reserve currency, benefits, and that would have meant that silver would obviously be better off in terms of whatever conditions happened, right? But that seems to be not the situation.
Well, you have to know that silver is a schizophrenic diva.
That's a good one.
So it really behaves very crazy and unexpectedly. And you see, last year, gold had been already in a bull move. It went up from $1,050 to, where was it before the corona? It went to 1,700, right? And it was up already $700. And silver made a new low, a new 10-year low last year in March in the corona crash. And then it went up from where it was the low at 1160, it went up to $30, nearly tripled. It's extremely hard to calculate it. It's just a super small, tiny market. Most of the silver has been used. So it's not like with gold, where most of the gold that has been mined is sitting somewhere in a vault. No, most of the silver is gone. Silver is a byproduct. And silver is one of the best electricity metals out there. So I believe down the road, in the big picture, silver will do really well, and we're going to see triple digit. But silver usually tends to move in the last quarter of a bull market or in any cycle of a bull cycle. So if you look at the last bull market between 2001 and 2011, the best time for silver started in 2010, when it went from $17 to $50 within 8-9 months. And the first 10 years, it performed okay, but it didn't really strongly outperform gold. Or whenever it outperformed gold, it also outperformed it on the downside. And then overall, it didn't show such a strong performance. But in the last quarter of a bull market, suddenly silver shows up to the party and outperforms like crazy. And you can believe something like this this time too. So that would mean if gold breaks out above 2,000 and then is on the way to 3,000 and 5,000, at some point suddenly silver will show up and then run relentlessly for a year higher. You will see triple digit silver easily 100, 200, maybe $500 for silver. I think it's easily possible, but you have to be much more patient. You have to be careful. Again, even especially with silver, you don't use any leverage, please. Keep in mind, it's a schizophrenic diva. It's really hard to control and understand what's going on there. It takes time. I love to have physical silver. I think it's very undervalued, especially if you look at the gold-silver ratio. But you need to bring a lot of time and patience to the table.
So thank you for that. So I think the last couple of questions really. So one is really, you spoke about schizophrenic diva. So the big question here around China still persists, right? So, they've now gone after their own tech sector and sort of reduced valuations by maybe 35, 40% already, right? And they went after Bitcoin and got that out of the ecosystem also, right? One of the challenges that I think that exists in the cryptocurrency ecosystem is really this regulatory challenges that authorities might face, right? So the ability to sort of cut off the ramp ups or ramp downs out of, crypto into traditional currencies, or, sort of regulated, put taxes around it. The fact is that regulatory authorities haven't really tested too much of the crypto ecosystems, and that's always a little bit of a risk that exists. What do you think is going to be the situation, particularly when you got countries like China sort of doing all kinds of weird things? Speaking of schizophrenia, how does that pan out? Is there a big risk from the regulatory ecosystem to the the Bitcoin ecosystem?
No, I mean, you've seen, like, they got rid of most of the Bitcoin mining, and that was actually a strong argument against Bitcoin for many years, that the Bitcoin mining was so centralized happening in China, that there were so many Bitcoin miners in China. Now they've been all destroyed by their own government. They all basically sold the equipment and probably left the country, I don't know, or sent at least their Bitcoin somewhere. And as far as I know, many of them try to now move to Texas and to America to start mining there, because they hope to have a better regulation environment there.
Or maybe Iceland.
Yeah, as well. But the problem, and that is something that is unfortunately not addressed at all today. And obviously, I think that is also, if we talk geopolitics, this is the point where India really has an advantage and has to really push forward. Free market, democracy, free speech, competition. This is what creates really good results for the people in the long run. Dictatorship, totalitarian systems, they destroy the free market. And I'm married to a Cuban. My wife is from Cuba. I've studied in person what happens to socialism and communism. And it's a nightmare. People starving. And all that China basically has going now is that for many decades, they have suppressed their people. And then Deng Xiaoping opened the market up. And of course, a huge wave to catch up. And for many decades, China had extremely cheap labor that helped to propel that nation to the top. What they're doing now, I'm not sure if this is a really good idea. Yeah, I think that's a big advantage for India. And China tried to basically crack down the Bitcoin market, the Bitcoin miners. The result was that the hash rates dropped, difficulty dropped, and many Chinese Bitcoin miners had to give up or leave the country. But the Bitcoin mining, the Bitcoin system itself flawlessly continued to run. And that was an extremely impressive development, actually. And I hope, and I think actually, to be very honest, this is our only chance as mankind down the road, because we've seen in many countries now move towards totalitarian approaches and systems. Our chance really is that Bitcoin will overcome all this, because otherwise we probably, even in the Western countries, will end up step by step in a totalitarian system. Free speech is in danger. Most of the big tech companies are running the world nowadays, and I don't think it's a good development. I repeat myself, but I believe that a free market, free competition, free speech is the best solution for all of us. Yes, sometimes you don't like to hear what somebody else thinks or has to say, but then again, that's the only way to live together. You have to respect that other people have different opinion, and you have to give them the right to speak out. And that's really in danger these days. And so I see actually a big opportunity for India. I mean, there are so many programmers in the country. Some of them are English speaking, and you have democratic and rather free market structures. So I hope that more and more countries adapt to Bitcoin, and I think that China probably shoot itself in the foot what they did, but they're not aware of it. I think Xi Jinping is actually a dangerous guy. So let's see how this all plays out. I think Bitcoin is the solution, and hopefully more and more of you will also look into it. Let's see, there is one more question. Technology is evolving very swiftly, ongoing. What does the future of IT companies look like? Well, I'm not an IT expert in that sense, but yeah, I think what we didn't talk about too much yet is all these decentralized ecosystems, the metaverse, where basically you have virtual worlds where people come together, especially in gaming, for example, and everything is running with blockchain technology. I think the future is definitely IT companies that are able to adapt and are open and have the knowledge of blockchain, that blockchain technology, that I think is a super key feature in the future. And let's see, Rajeev is there again. I don't see him.
Yes, he's just joined.
Okay, so it could be that even IT companies become decentralized in the future, so that you have basically IT engineers all over the world, and they work together on projects, and it's not one big company behind them, but it's more like they bring the parts each other together, and the structure behind it is decentralized. I think there's so many exciting things going on, and it's hard to even catch up with the speed and the development in this whole sector. So you probably have heard of the NFT world already, the non-fungible tokens, where you can basically buy a digital piece of art and then it's yours, and the entry is on the blockchain. And this basically created a lot of, I mean, it was a big trend over the last few months. I'm not sure if the prices that are being paid are really sustainable, but it's a whole new thing. And especially for me, as for example, with my music background, it's been very hard to make money with music in this digital world over the last 20 years. Luckily, I saw that shift coming very early. And that's why I also decided to move more and more into finances 20 years ago. But there was a time where you couldn't make any money with your music, even though they played it everywhere. And still on YouTube, it's still hard to really monetize the money in a good way and in a fair way. So if down the road, blockchain technology can help with NFTs, for example, to monetize my music, and whenever you play a music, there is a micro payment happening in the background. That will very likely help, especially artists and little content creators. Also, like browsing in the internet, and you will just, without actually knowing and realizing, while you browse and do your normal things in the background, your browser pays content creators on other websites, or you get even money for looking at banners while you're surfing. So there's lots of things coming, and you need to be very open-minded these days and understand that things are changing constantly. Rajeev, you're back.
Thank you. Sorry about that. For some reason, I had a technical glitch. My apologies about that. But anyway, I think it has been a great session, Florian. We have had, very interesting, viewpoint. I think we went all the way from what happened in, in the Weimar Republic of Germany to, the currencies and what is happening to the currencies. We got into gold, we got into cryptocurrency, we got into the crab cup boom, we got into Austrian economics. So I think, we covered a wide range of subjects and topics today. And you've obviously been, great explainer and a great storyteller. So thank you so much for this. I think the background that you come from, that ability to bridge multiple things really helps here, and I think that's something that's fabulous. We look forward to having you more in India in the near future. So, since you're now only 2 hours away, or maybe at least, I think it's 3 hours away in terms of flight. So I'm hoping that we'll catch up with you a little bit more frequently once travel restrictions open up. Thank you so much, and look forward to further sessions with you.